I'm Patrick Beecraft. Today we're going to be covering the statement of cash flows for my week 3 assessment. So let's get to it. What is a statement of cash flow? A statement of cash flow is going to be reports on a business's cash receipts and cash payments for a specific period, and a cash flow is specifically cash receipts and cash payments of a business. The question arises of why should we care about cash flows and how can this help us? Well, these can do many things, such as help us predict the future, and when it comes to our cash flows themselves, so basically where's the money coming from. It's going to help us evaluate the management system and the structures we have in place, and it's also going to be able to predict and pay debts and also dividends we need to pay back to our investors. So there are going to be 3 main classifications of cash flows. We're going to have operating activities, we're going to have investing activities, and financing activities. They're going to be activities that create revenue or expenses in an entity's business. Investing activities are going to be activities that increase or decrease long-term assets. And financing activities are going to be activities that increase or decrease long-term liabilities and equities. Take a look at Exhibit 1 from the book on page 317. It's going to be showing us the operating, investing, and financing cash flows when it comes to balance sheets accounts. Looked at the classifications of cash flows, let's take a look at the 2 formats of operation for these activities. The first one is going to be the indirect method, the second will be the direct method. The indirect method is a format of operating activities, the segment of cash flows, starting with the net income and reconciles to the net cash provided by operating activities. And the direct method is going to be a format of operating activities section of the statement of cash flows, lists the operating cash receipts and cash payments. All right, now we're on to the ethical portion of our little presentation. So we're going to take a look from the book's example here on page 329, and where they're talking about a manager telling an employee to take one of the long-term sections of the notes payable, turn into a short-term notes payable. Now, the ethical implication here pretty much goes into you're going to ruin your investors when they're taking a look at your company, their expectations of what you're really doing. So, in essence, changing anything from the books, whether it be short to long or long to short, it's going to be a misrepresentation of your company and what your values are coming from the bottom to the top. And in no way should you ever try and change anything, even when under direct line of communication from your manager, if you know it's going to be wrong. To end my little ethical quandary here, I'd like to talk about Psalms 119:101, and it reads, "I have refused to walk on any evil path, so that I may remain obedient to your word." And in this case, for this little tidbit of our ethical quandary of not changing any of the records to put us off in a false light to anyone looking inward, that's what it's all about. The integrity that you must have in your judgment, your right calls, to not stray from the path of just and be holy in your actions no matter what, because we are the first line of defense to stop any evil from happening, and we must do our best to keep things and show ourselves in the best light possible. It may not be the best for us, but being truthful in our actions will gain us much more respect in the business world. Things off, let's talk about which levels of business are going to use this and how they're going to apply it. So when you talk about low-level business, entry level, you're looking more towards the lines of short-term investments, not really keeping track of too much. The more mid-level you get, the longer term these loans or the notes are going to be. Higher level, that's when you're looking at people making the calls for the very long-term cash flows, and when it comes to the notes payable, the larger accounts, the larger investments that they're trying to make, they're going to want to call on all of those shots. So in closing, everybody's going to use this. It's just a matter of the amount of money that they're going to be keeping track of while doing so. So that brings us to the end. I hope you've enjoyed this, and I'll see you next week.